Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm your guest, Shawn Good. With me, as always, is your host, Tom and Mark.
Today's guest, his meetup is in the suburbs, which there's not many out here. So we'll talk about it at the end of the show. I believe it's the first Wednesday of the month in Palatine at Lamplighter. So like that's big for out here. There's a lot of stuff that's happening in and around the city. There's just not many out here. So that's good for everybody.
Yeah. I mean, if you could just, let's say you go to like 2 or 3 of these a month, like you're going to make a contact that might not pay dividends right away, but it will pay dividends at some point down the line. Like it's just, it will.
Well, I think I always tell people, a lot of people get into real estate because they want to be in real estate, but they don't know where they belong in the whole ecosystem of real estate. And when you go and you meet people and you might like someone or you gravitate to someone and you gravitate to them because maybe you like what they're doing, and you actually kind of can find yourself when you're networking and talking to these people at these groups, or a speaker comes in and inspires you. So there's a lot of inspiration at these meetups.
Yeah, no, I agree 100%. So, all right. What, you want to jump into housing provider tip here?
Sure.
Let's do it.
This week's housing provider tip is around house hackers, or it doesn't even have to be a house hacker. So if you are selling your property right now and you're going to keep the property you're living in to rent it out, maybe a lower interest rate, maybe just numbers make sense, or maybe it's just the first property of your portfolio you're going to grow into. When you go to buy your next house, what I'm seeing a lot of buyers run into the issue with is they need to have a signed lease with proof of security deposit in order to get the clear to close on their new house. Now, for whatever reason, I don't know if I don't think it's like anyone trying to do anything wrong, but those details are not making it to the buyer soon enough. Where, for us, we come in and people are looking at hires for management or looking at hires to find them a tenant. And they're casually going through the process of looking to hire us. And then all of a sudden we get a call saying, I need to get a tenant by next week. Can you help me do that? Because all of a sudden my lender called me up and said, I need this to have it clear to close so I could close next week so I could buy my new house. If you're looking to buy or you're looking to upgrade or move to the next house hack, make sure you're asking that question up front. Will I need a signed lease in order to have the clear to close? Because I'm seeing a lot of people panicking and having to backpedal or put off closing altogether, 2-3 weeks, and putting a whole bunch of ripples into their closing transaction because they just did not know. They didn't ask that one question, nor did anyone give them that knowledge up front. Today's guest is an attorney, which is always fun. And I have another question for you I'm going to ask you off here. But he's an attorney, real estate investor, hustler, loves doing everything. We'll put a link to his full bio in the show notes. But without further ado, Shawn Good.
Thanks, guys. Happy to be here.
All right, Shawn, welcome to Underground.
Thanks for having me.
Man,
good to be here.
Yeah, I'm excited. We were connected. I'm excited you're coming out here. I'm sad I missed the meetup a couple months ago. You got to...
It was a good meetup.
Yeah. I'm looking forward to coming out. So, but kind of give us a rundown of how you got into real estate.
When I was in my early 20s, my dad's best friend basically is an investor. And he's kind of different than me in a lot of ways. He's very frugal. He lives very modestly. When I was in my 20s, I admired him because he didn't really have a job and he slept till noon. As a 22-year-old, I was like, this is wicked. Like, this is awesome. This guy's doing this. So I kind of followed him around for a while, and he's like, oh, you got to buy condos. And so back then it was the bottom of the market. It was like 2013, 2014. The condos were $20,000 to $50,000. Now they're worth $200,000. So yeah, I followed him around and bought my first condo and went up from there.
Where at?
First one was in Palatine on Sterling. And now I'm not a condo buyer because that was a train wreck. I mean, the HOA went under. The guy who built the complex, who owned 40 to 60% of it, went to federal prison. I was forced to sell my condo to a private equity fund that did condo deconversion. So a lot of learning.
I remember that Sterling one over off of Dundee Road up there,
exactly.
up north. Yeah,
exactly.
I remember looking at that. Where are you from? You from?
I'm from Buffalo Grove. I went to Stevenson High School.
One of the top high schools in the area. So
yeah.
Hold on, let's talk about selling the deconversion, because we've had the deconversion guys on here talking about, let's hear it from the seller side.
Yeah, I mean, you go to these meetings with the board and they're basically saying, these people just straight up lied to all of us.
We're defunct. We're screwed.
Yeah, and they were lying. Like, the guy was like, the paperwork showed like his daughter was the roofer, his son was like doing the landscaping, and his niece was doing the snow removal. None of it was done. The roofs were destroyed. The guy stole all the money. He went to federal prison. Actually went to high school with his son, and I consider him a friend. Pretty weird. So you go to these meetings, and then all of a sudden private equity comes in and like, this is what we're offering per unit. And the writing was on the wall. I think I bought it for 40 or 50 and I sold it for 75 or 80. So I was like, I'm a winner. Like, a couple of years, I survived and I ran away. But it was devastating. You saw people who were on fixed incomes teachers, put all their money in this unit, be able to live on their Social Security or their pension, and then being told, you have to move out, you get a little bit of money, good luck finding something else.
Yeah.
So it was bad to watch.
So I bought a new construction unit in a 28 unit building in West Chicago before the crash. So it was one of those, these are ones I got stuck with. It's great now because the values went up. My mortgage halfway paid and rents have gone up too. But I've brought in people a few times to try to get them to convert it to apartment buildings because I could sell out. I'd make good money. But it's the 3 or 4 people that bought, that's like their forever home. They'll have nowhere to go, and like they're the ones that are rallying up another 3 or 4 other people just to basically not give us the 75% that we need. Part of me is I've never really fight it because like I feel bad, like I don't want to be that guy. Like, but that's usually what holds up on the owner side of those deals going through.
Yeah. All right. So we buy a few condos. Is the law practice up and running at this point as well?
Yeah, I work with my father. He's been doing it.
What made you want to get into law though?
I just followed his footsteps. I was going to be an architect, which kind of let me be interested in buildings. And in college at SIU, I was like, I'm not that good at drawing. In high school, I was like, I'm pretty good at this. And then when I got to college, I was like, I'm not that good at this.
There's a lot of calculations too, man. Like architecture sounds fun. And then like I see all the work they have to put in these plans. I'm like, this sucks. Like I do not have this attention to detail.
They make it sexy in high school. And honestly, I was not grown up at 22 and ready to go into the corporate world. So going to law school was a great way to grow up for me. A little more, structure, a little less structure, get to defer getting a job basically. And it worked out. I needed it.
All right, cool. So buy that condo. We buy a few more condos. We talked about you and I talked, you bought that 8 unit pretty early on.
Yeah.
Was that like the first multifamily one?
When I bought that condo that went under, I was like running with a friend at that time. And he's like, what are you doing? I'm like, I'm sleeping on the floor at this condo and I'm painting it tonight. He's like, so you don't want to come out and have beers with me? I'm like, no. So he's like, my family's kind of in real estate. I was like, what do they do? And he's like, we have this 8 flat in Prairie View that it's like Lincolnshire near Buffalo Grove where we grew up. It's a really solid neighborhood. And he's like, yeah, they don't know what they're doing. I was like, well, when they sell it, call me. And like 7-8 years later, he just calls me out of the blue and it's 3 out of 8 units are occupied. Walls are opened up to make ranch homes basically out of 2 units. It was kind of funky, but we made it work. Wintrust they gave me a loan at 26, 27 years old for $700,000.
You have this 8 unit building. You're taking on a rehab. You're taking on vacancy. You're 27, like probably don't have too much cash here. All signs point to saying, don't do this, run away.
Oh yeah.
What made you plow ahead?
I told my dad, I was like, hey, I got this deal. You got to partner with me. He's like, I'm not partnering with you. This is insane. I don't have the money. You don't have the money. What are you doing? I was like, okay. So I went to my brothers and I was like, you guys want to do it with me? And they're like, sure, let's figure it out. And it was, the thing I'll tell you though, is it was a newer construction 8 flat. So it had copper plumbing, it had PVC, it had drywall, it didn't have plaster. We did like a roof, we fixed the boiler, we added a new hot water. It was really light stuff. We weren't doing heavy construction on it. It was a clean building from the go.
How did you get the loan? Right? If you don't have too much income coming in, the thing doesn't pass DSCR on day one, like...
I have no idea. So I'll tell you, I was going to the Schaumburg Business Association meetings and just networking there. When I was a brand new lawyer, I just went everywhere and networked and tried to meet people. And I met a guy named Don Hill at Wintrust. And Don funded this deal and then disappeared. Like he literally retired.
You got him fired.
He retired like 3 weeks later. Like I've never seen the guy again. I want to thank him because it like got me in the door to do all this crazy stuff. But yeah, he like gave us the loan. And one of my brothers at the time was, 4 years older than me and doing really well as a lawyer. So we had him as like
he's the anchor,
the personal guarantee basically. But yeah, they let us do it. So and it worked out well. We sold it and things are good.
You talked a little bit about off air. You talked about how when you first bought that, just trying to figure it all on the fly. Talk to us about just going to the meetups, meeting people, like putting all the pieces together.
Yeah, somewhere along the way, I was living in a house that I was flipping in Norwood Park, and someone's like, oh, you must be a Bigger Pockets guy. And I'm like, what is Bigger Pockets? And then I went down the rabbit hole. I was like, oh, there's meetups to go talk to people. So I think I went to the Chicago Multifamily Club once or twice. And then like the third time, someone like gave me this 8 flat. I was like, I have to figure this out. And, the nice thing about these meetups is you can kind of just grab onto somebody that's willing to talk to you a little bit. And yeah, I pretty much grabbed onto John Kasman, who was kind of running the show. And I would just call him all the time. and he would answer my calls and tell me what to do.
We'll link to Casman's cell in the show notes. No, I'm kidding. But for our listeners who don't know, Casman was episode 15, one of the OGs, and then we had him back at 136. Great guy. If you don't know his story, go listen to it. Great guy to follow. And just does a ton in the multifamily space now.
Definitely gives back too. I mean, he was instrumental in me figuring this out. I mean, the multifamily club was.
So what are some of those questions? I think a lot of people wouldn't even know where to start. Like, what are some of the things you're bouncing off him?
How do you structure the financing? They were offering interest-only periods. How does the rehab budget work? I didn't even do construction draw. I had never done a construction draw back then. I mean, I was asking people to look at the numbers. I'm terrible with Excel. I mean, I'm like a napkin math investor, and I still am. It was totally vacant. There's no small multifamily within miles of there. So, not that you comp a multifamily 8-flat, but like there's nothing. There's very little rentals in Buffalo Grove, Lincolnshire, anywhere over there. So it was kind of, nobody could really figure it out. Even the appraiser was like, what is this place? How is this here?
So you close on this thing. Any funny stories with those existing tenants? You walk in as a 27-year-old, they're like, what the?
It was not funny. I mean, it was weird. One of the kids was like, the owner's grandson lived downstairs. And I actually went to high school with him, but I went to high school with like 4,000 or 5,000 people. So we were in the same graduating class, never met him. Nice kid. He signed the lease. I don't remember if his parents were upstairs at the time, but there was like walls open to like make like a mega 4-bedroom, 2-kitchen, 2-bathroom unit. We were closing up walls. I had one tenant that we didn't evict that we gave cash for keys. That building was smooth. We've had some weird things happen, but that one was smooth, luckily. I mean, it was just an easy building because just how nice it was.
All right, so now you got the bug. You found bigger pockets. You got an 8-unit under your belt. What keep us rolling here?
Yeah, so I think around that time, John Casman again posted in the Chicago Multifamily Club, and he's like, what do you guys need right now? What's everyone struggling with? And it was like early days of COVID, and I was like, oh, I'm going to go house hack. So I was like, I need a 4-flat. Anybody got a 4-flat I can live in? So then a wholesaler responded, I got you, or something. I was like, whatever. So yeah, he brings me, I don't even think I walked it. I think I walked it at the inspection. I was just all in. It was a 4-flat on basically Central and Elston near Coletti's.
Yeah. My neck of the woods, baby.
Yeah, it's a great building. I got it. I'm still friends with the wholesaler to this day. So yeah, it was the whole, and I still have that property with a 30-year fixed loan at
how much?
3%. I think I paid $420 for it, and I think it's worth like $750 plus. I mean, the zoning certificate says 2 units. It's got 5 meters for gas and electric. I think it was I have the original blueprint from the seller. Like they've owned it since the 50s, and it's got 3 units. So I don't know. It's just one of those ones we don't bring a lot of attention to. We're very friendly with the alderman. Let's just say we donate to the alderman.
We house hack. You still own that one. Is the game plan here to continue house hacking? And also at this point now, is the law practice starting? Because the law practice, I think, feeds into this a little bit, right?
Yeah, there's definitely a lot of overlap. I mean, I actually started doing more deals with Renovo recently, and they like looked at all the stuff that I've done, and I never realized this, but we've flipped like 15 houses in multifamily buildings over the past 5-6 years. Yeah, the law practice is super helpful. I mean, we get deals done really fast. I mean, I can really ride the lenders, the title company, and the other side to get things done. So after the 4-flat, I think I bought another one in Skokie, which we still hold on to, me and one of my brothers. And then I think shortly after that, I bought a 5-unit on a lake in Fox Lake that's Airbnbs, most of it. So that's kind of where it led.
What focus does the law practice have?
Yeah, so the primary focus when I joined my father was all Social Security disability. We were doing about 300 cases a year. Now we're pushing 600. And I was always interested in real estate. And when I was a kid, I used to go to closings with him, but he stopped doing closings 20 years ago probably because it just wasn't as profitable. It's still not that profitable, honestly. And so I just started going to meetups and networking and sort of figured out closings. So now we do, I don't know how many we have, 20 or 30 at a time. And we do everything from condos to, I've done maybe 80, 90 unit apartment complexes for people.
Do you represent yourself when you buy or sell?
Absolutely, yeah. We get great discounts on title.
Yeah.
And any of the fees. And, we can make things go so much faster. And that's, I say I'm a napkin math person, but I can really, when we do off-market stuff, which is kind of our new focus, I can basically, when I write an offer, I'm like, I'll pay your taxes. This is your net number. You just pay your water bill, your mortgage, and whatever other liens are against the property. I think that's kind of a nice thing that a lot of the people that send direct mail, a lot of wholesalers, like they still don't really know what they're walking with. So that's one of the advantages we have.
You know what's crazy? When you play in the under 30 unit space, I see just as many people that are successful doing the napkin math. I think I lean towards that more often until I'm really concerned, versus the guys that blow out these spreadsheets that you can never reproduce even if you use ChatGPT to help you. But I see both sides do equally as successful. Like, is it one overthinks it or one is just lucky? I might be on the lucky side of it. That's what I'm saying. Like, what's your thoughts on that? Or where do you fall in that realm?
Well, with flips, definitely more analytical because you have a shot clock and you need to get out and it needs to be profitable and you need to calculate all the holding costs. Like, that is much more analytical. On the holds, there is definitely an art to it, right? You have to run your numbers, you have to know all that, but it's got to be a building you want. What's the Charlie Munger quote of like, it's better to buy a great asset at a fair price than a fair asset at a great price or something? You like the location, you like where this is going to be. You can't run a trajectory of 10 years. Yeah, maybe you're going to hold it for 10 years, 20 years. Like, you can't spreadsheet that. You can spreadsheet it to a point, but at some point it's like, all right, does this make sense? Does this fit what I want to do? And you pull the trigger. So I think it's a little bit of both.
I think the smaller the building, the harder it is to do a 10-year projection. You can really, on 30 plus units, really calculate, okay, $25 a month increases over this many years. But when you're doing 2 to 4 units, at some point you kind of just want to go, stay where you are, tenant. I don't want to paint. It's going to cost me more than $25 an increase.
The other thing to piggyback there is like when you have that 40 unit courtyard building, like the CapEx and the maintenance becomes like a price per door type of thing that you can base off your other properties. When it's a 2 unit, it's like nothing, 10 grand expense. Yeah. Right? Like it's just like, it's not like this super math equation you can solve for.
Yeah.
I think if you're holding single families or 2 flats, it ends up being, do the numbers work now? And it only gets better for the most part.
That's how I see it.
Yeah.
And we do hold some, I think the biggest building, and this is not one I'm a partner in, but like I help manage my dad's 9 unit, and it's still too small to like really build out those models. I think the brokers,
you're not doing a budget every year or anything.
I think those brokers and the pro formas below 30 units, it's all just kind of.
Yeah, even for that, if it's for me, it's like, all right, 50% expense ratio. Like you just kind of chalk it up to these estimates, and then you go and say, well, now everything needs to be replaced in the next 5 years, and then you start kind of backing into what is probably not a good deal, if any more so than how much do I need to fix it.
Yeah. All right. Before we talk about off market, because we've riffed on that a couple times offline, let's talk about partnerships. You've mentioned it several times. How do you structure something like this? You had a family member, you need to go in with them. Like, give us a little bit of idea, because there's a lot of our listeners in that same boat.
I'm very lucky now, but basically when I bought that 8 unit, my brothers, the partnership structure was everyone brings in a third and I do all the work. So I was not happy for a long, and let me tell you.
I find a deal, I do all the work.
Yeah, and I mean, I'll tell you the numbers. I mean, we bought it for like $735. We sold a piece of land behind it for $80. Our cost basis was like $680 after construction. We sold it for like $1.4 million. So I was kind of annoyed that I managed it. I did the rehab. I did everything. My little brother's like, I did the model. I'm a finance guy, and he does work at a REIT. But I was like, okay, I was like boots on the ground for like 3-4 years, and you guys are literally going to clear multiple 6 figures on this. And like, yeah, I was like, oh, yeah, oh, this is great. So now partnership structure is just me and my dad. We're partners at the law firm, and we're partners in all the flips and the multifamily. And I don't care if I work more for him. My dad's done so much for me. I mean, I was a terrible kid.
Retribution coming now.
Oh, it's payback. He should sit back and watch. I mean, I was in tons of trouble as a kid. And I mean, I got mediocre grades, but we were all, my dad was a single parent. I have 2 brothers. I was the middle, and we were just pure trouble. I mean, we're lucky we all didn't go to prison.
All right, so we're not going to get much partnership answers here, I see. No.
I mean, there's ways to do it.
Be a terrible kid and then give back.
Pay back to your old man.
Yeah.
I mean, what's funny is next week, which is going to be October 20th, I'm speaking at the Multifamily Club on partnerships. I mean, if you want to do partnerships right, get an operating agreement, sit down with separate lawyers, basically, because you're adversaries in your partnership, and really hash out an operating agreement and know that, if you're like me, you're going to end up doing the most of the work. I mean, I would never, you got to do these things right. So you got to find a way to get the building running or the flip done on time and on schedule. And, I think partnerships are pretty high risk.
I've absolutely given away too much in every one of my partnerships, I feel. Right? I mean, that's not me like being like, oh, I do all the work. It's just like, if you objectively looked at it from like the outside and it's like, but they're friends, the deal gets done, everyone's happy, but like, it's probably better to be on that side than to underdeliver. So I'm not saying that as like in a bad way. I'm saying that it's probably the way it's supposed to be.
I feel like I've always, and it's my brother's, and it all worked out. You move on, you go to the next deal, whatever. But I'm just someone that always puts in more than other people. Probably, I was never like in school. I was never like the straight A student that made it into law school in his sleep and had the highest scores. I was like low scores, struggled to get B's, but I'll work an extra hour. So for me, that just always carried through to real estate. It's just I'm always going to put in more, and it is what it is.
Now, when you have partners that have that type of attitude, usually it works out, and it usually does fall in the back of one or two of the people. But the good thing about a lot of real estate transactions is you could do the heavy lifting up front, and then it's cruise, and you don't have to necessarily worry about who's lifting harder or not, unless you have to have. I think where I see a lot of partners get in trouble is like, all right, now we got to go put that roof on. Now we all have to bring $3,300 to the table, and two of the three people don't have it, and then you have to fund it. That's the crappy part of the partnership. If you have to if you have to be the bank.
Those big things like the roof should be planned out if you're in a partnership. I mean, you should, I'm a big advocate for sewer line inspections. Just as someone who's done transactions for other people, there was a year once where like two people closed on a house back to back, like one spring, and both the houses just flooded because the sewer line collapsed with sewer water, and it was bad. So then my next deal, we bought this 4-foot, I said in Skokie, we got the sewer line inspected. It was bad. We were like, we'll buy it as is. And then we're like, well, it's a $17,500 sewer line. You guys want to fix it? And they're like, we'll fix it for you. And I mean, they didn't fix anything else at closing. That's the only thing I care about.
That's also a good point. Like, even if you're as is there, they're going to have to do that for whoever it is. Like, that's not like a request from you where it's like, oh, well, this guy's hitting us up. Like, that is like, oh crap, we have to do this no matter what. This guy's going to close a week from now. We're already down the line. Like, we might as well get it done.
If anything, they have to disclose it then. If they do choose to back out, that's
what I'm saying. It's not something that anyone's gonna skip on.
Yeah.
So
as a lawyer, I hate kind of going backwards on saying it's as is, but there's sometimes it's just you have to do this or we're gonna back out. But it bothers me when I represent people and they're like, "Oh, I signed it as is. Let's nickel and dime them for."
No, this is.
I have I buy most stuff as is, and the threshold is like 15, 20,000. And now I'm willing to bite off more just with experience. But back then we had, 12 units combined. I mean, it's just different now.
All right. So let's talk about off market marketing, because you're spending a couple $1,000s a month. Yeah. Just lay that out right now, like how you got started down this realm, and then walk us through to like where you are today. Kind of share some of those numbers and some of the strategies.
Yeah, I want to just back up and tell you how I got here. So the guy who sold me the 4-flat, I represent him. He's a wholesaler and he buys and sells and stuff. So I did one of his deals, and I
anyone we know, by the way, name drop.
Do you know Aaron Buchanan?
Oh yeah,
yeah. So I I don't know if I should say this, but whatever. He'll be okay with it. He's a friend. So he wholesaled me a deal, and I've seen on other closing statements people are getting this 100% loan to value on flips. So I'm like, what is going on here? And so I talked to some of these wholesalers, like, this is what you got to do. You got to join one of these masterminds. I was like, okay. So I joined Collective Genius, and this is a long story, but what happened there is basically I learned so much about marketing that my law firm doubled in size. We went from 300, 350 to 600. And then finally, I'm probably 18 months in there, I've been able to finally focus on the off-market transaction. So now we're sending direct mail to a very, defined set of zip codes. And we're about 5 months in, and we pretty much are lining up a deal a month. For flipping or just cleaning out and listing on the MLS. And we're also taking people out of foreclosure at a very high speed. A lot of these people don't make good decisions. That's why they're in foreclosure. So they wait till the last minute to accept a cash offer. And, it's one of our advantages being lawyers that we can really get this done. And the fastest I've closed is 7 days, like start to finish.
What, like, do you mind sharing like what you're spending per month? Like how many like phone calls you're taking, how many deals you're walking? Like just talk through some of the specifics.
So I think right now we're spending about $7,000 a month every month on direct mail. It should be, depending on the mailing piece, around 6,000-ish pieces a month, maybe 6,500. They're pretty high quality. The calls are really up and down. I don't have the exact metrics.
And are you handling them?
So I do when I'm available. I actually walked a house like 18 months ago or 2 years ago with a wholesaler who was kind of solo, and I liked the guy, and I kind of kept in touch with him and said, hey, you want to have coffee? I want to talk about working with you. I think he's really sharp. He's really good on the phones. All the calls are recorded so I can listen to him. I'm like, this guy's way better than me. So we've been doing it for a few months. We have our first closing together Thursday. So that's his first, he's all commission fee, which I'm really excited to give him. It's like a $20,000 fee he's going to make at the closing. We for a while we were walking everything. Even if it wasn't a deal, I wanted to go belly to belly with these sellers and just kind of get the reps in, talking to people, see what was going on. So there was, it's probably 2 to 6 a week is what we see, and I hope we get 1/3 of them.
From the start of that belly to belly rep sessions, like what did you learn, or what did you come out of the back end thinking like, oh, I wasn't even think about that in the beginning?
Yeah, I'm sure we lost deals. Number one, this is really competitive. You're going into these houses where people send direct mail, and you're the 7th person that has walked through. And you got to move quick, and you got to stay in touch with these people. You're not just going to send a piece of direct mail and then you're going to close. Like, that happens rarely, it seems like, but you're really going to have to be following up, being consistent, and really firm with the numbers. And the last thing is, you don't really want to give your lowball offer. Like, there's 7 other people. You better be really good with your napkin math and really competitive with your offer.
They need to know that you're serious, right? Like they don't want someone who's going to go in there and waste their time. And I think for our listeners, like, think about this for a second. Like, it could take, you got to commit to this for at least, I'd say, like 6 months, 9 months, or whatever. So you're 50 grand in the hole on marketing, or 7 times 6 is 42. You are, walking all these things. You're taking all the phone calls, all to get, 3-4 deals like that. When people's like, oh, I can't believe the wholesaler made 30 grand. It's like, well, yeah, he did. Like, he's put in the time to do this. Like,
yeah, and we don't really wholesale. Like, there's a cash conversion cycle issue here. It's a challenge. We're still new to this. I'm not saying I've hit it out of the park yet, but we are getting solid leads. We've got solid deals lined up. And, the goal for me isn't to become a flipper or a wholesaler. It's to buy and hold rentals. So like this week, we're closing on a 2-flat in Avondale that I think is a pretty solid home run. I'm paying the guy who answered the phones and, builds these relationships with people, a large fee of commission on the front end as I take down the rental with Renovo.
I like that strategy a lot, right? Because that's the price you pay him becomes less important the longer you hold that property.
Yeah.
Right. Like that 20 grand or whatever it is, like that becomes, if you're flipping a property in a year, it's like, like eats into it. But over like a 10-year period, again, like time's the biggest asset. Then money becomes nothing at that point.
Yeah.
Rounding error.
Yeah, and I'm young, so I really subscribe to you guys saying that. I've heard you guys say that time is your biggest asset, and I'm like, I started this in my early 20s. Now I'm in my like mid to early 30s. I'm like, I guess time is running, but I still am very young.
Yeah.
And it's, the younger you are, the more advantageous you have.
How are you choosing to spend that marketing spend? Like, are you focusing on Northwest Side, Avondale, or are you focusing?
Yeah.
Where are you looking at?
So we have deals all the way from South Holland to Waukegan, and we really pick zip codes. And I really only focus these lists on probate and foreclosure. I know there's guys doing big, broad lists, but you kind of get used to these conversations with probate families and people going into foreclosure. And you also learn, like, as from the legal side, like, what do you need to line up to get this closed as fast as possible? When you're dealing with a foreclosure, you might be dealing with the seller, but they need to get the final payoff from a foreclosure law firm, and they don't want to give it to you. So like these big law firms that do tons of foreclosures, it's 7 to 10 business days to get the paperwork. And they're not just giving it like Chase Bank gives you your payoff for your loan. It's follow-up. It's me talking to my paralegals like every day, hey, did we get it? Did we get it? Did we get it?
Why do they care? Like why is that law firm holding out?
Technically, they're not supposed to. I'm sure they'll tell you that there's tons of systems in the way, and they need to communicate with the bank, and they need to calculate their legal fees. And there's a lot that goes into it, but it's really inefficient.
Probate's pretty painful. I'm dealing with a couple sellers right now that are just waiting for the light at the end of the tunnel. How long does that typically take in Illinois? I heard Illinois is just the bigger the problem.
I'm not a probate lawyer. It really varies. I mean, we've gotten some that, like right now, I bought one and we wholetailed it like a month or two ago, and she already had letters of office. So we have one that we're working on getting under contract. We can't actually have them even sign the contract now. And they're saying, oh, we started probate in like August. We'll not have the paper, or maybe September. We won't have the letters of office, which gives them the right to sell until mid to late November. That one's in Lake County. It used to, I mean, I don't have a ton of data on this. It used to be faster in Cook County. I have a feeling, because I have done transactions where probate was involved, not on my own, but for clients. And it seemed to be faster.
I've never heard that, faster in Cook County.
In the past, I mean, some probate attorneys probably listening, like, this guy has no idea what he's talking about.
All right. So how do you like choose to spend your day? Like, you have the law firm, you have a portfolio that you're managing.
Yeah.
You have, you're chasing these leads right now. There's a lot going on. How do you prioritize and focus on what's important here?
What gives you the most energy too?
I love the off-market stuff. I like the portfolio. I like acquiring property. Talking to sellers is fun to me. The law firm kind of weighs me down, to be honest. So just structurally, like at the law firm, we have a handful of people that are very hard workers. So like one of our paralegals, he manages with me all of our rentals. So we do that. He can leave early. He makes a little extra money on the side. And I got him into real estate. He actually just sold the 2-flat that he house hacked and bought his like forever home. So I spend most of my day chained to my desk at the law firm. And then once I'm freed, I'm immediately going to see houses pretty much when the people are ready. So it's a lot of people actually want to show these off-market deals like after 5 o'clock and on Saturday and Sunday. But we've been doing this for 5 months, and it's hard to kind of keep the steam going here, because I'm doing very long days. And I thought when I was in my 20s, I was like, oh, I'm really grinding. I'm like, oh, this is getting pretty rough. So we're adding more team members, hopefully. I mean, bringing on someone to do the sales calls for the off-market acquisitions has been great. He basically is, really dialed in. He's immediately answering the phones. He wants those calls. And then at the law firm, we're actually hiring. We're looking to bring on a lawyer in the next year, ideally someone that's like graduating law school now, speaks Spanish, and wants to go do these Social Security hearings that we do a lot of.
I think what you think is grinding in your 20s, first 30s, and even me now in my mid 40s, like it's so different. And I think as you get older, you just get more efficient and smarter and how to handle things and what not to do, I guess, with stuff. I imagine you had that leap in 20s to 30s, but it's crazy. Like, so the 40s is like when you're supposed to make all your money. So I'm excited about the back half of my 40s in that sense. But no matter what, it's funny to hear people in their 20s and like, yeah, I'm working hard. It's like, all right.
I was wasting time.
You throw some kids in there too. It's like, oh my God, you got 4 kids, Tom. Like, think about the balance you have. I just got 2 that are running themselves these days.
Yeah. What 5 years from now, what's ideal?
We're going to keep buying and wholesaling. We just list them on the MLS. That's the term I call it. And fixing and flipping, and really.
Real quick though, let's talk about this. When you go to wholesale, how do you are you getting financing for that? Because a lot of people want to do that and they're like, oh, I don't have money lined up.
Yeah, no, this is not, you guys hear me talking about the marketing spend. If you want to get into doing this off market, you're competing with guys that are spending 6 figures a month. We're tiny. So yeah, we're taking stuff down with loans. We're using Renovo, we're using Kiavi.
So you're calculating that in, all right, I'm going to pay my point. I'm going to pay 3 months of holding costs. Like, are you actually closing and then going to MLS?
Oh yeah.
All right. So you're actually closing on the deal and then turning around and putting it out there.
And the other thing, I pay commission too, to realtors. Like, it's kind of part of the business model in the sense that, like, if I can refer realtors my own deals, maybe they'll refer me their closings for their clients. So the law firm and the real estate transactions and the business we're in, it all kind of feeds together pretty well. Yeah. But yeah, we calculate that stuff, and the numbers are, when you're paying full commission, or maybe you get a discount because you're really good friends with the agent, you send them a lot of business and you're paying points. It's
important to know, like, let's just run through an example, Eric. Let's say you buy something that's, you could sell it in the MLS for 400 and you get it at whatever, 330, something like that, where it sounds like, oh my God, there's a huge spread. And it is a huge spread, but all right, you're paying a point. You're paying, call it 2 to 3 months of holding. Because even if you sell it right away, like the end buyer is usually going to have a loan.
Yeah.
Right. So you're holding it there, even if you're after contract, you're paying at least if you don't have a relationship, you're paying 2.5% to that broker on $400K.
Usually 4.5. You're paying both sides.
Yeah, you're paying both sides. If you want,
Yeah, and I'm getting, I think, a deal at 4.5. These are like friends of mine who I
all right,
do
so
closing with.
you're not brokering it. So yeah, you're paying 4.5%, 5% on 400. So you're losing, almost 20 there, another 3 for the points, another 4 or 5 for the holding, plus any like risk there. You might have to price drop. You might have things come up in inspection. That's if you sell it at your number.
Oh yeah.
Photos, like all the other things that come into this, the utilities, the landscaping, like that spread gets shrunk.
Yeah, I mean, I've lost money. I'm not going to sit here and be like, oh, I've done every single deal perfectly. I actually came here and was driving around this area 15 minutes early in Roselle. I did a deal here and I lost like 30 or 40 grand last year. So this is not like, oh, you got it for 70 grand below market, like home run stuff. Like this is high risk and there's a lot of money involved. This is not like a place where you just jump into and hope for the best. Like we've been doing this a while and I feel like I've got good connections and a good network, and we buy stuff without professional inspections. So there is tons of risk. I mean, I'm the one who's inspecting.
How do you determine whether it's going to be a wholesale or something you got to hold on to, I guess? Is there a minimum dollar amount you're trying to make? Like,
Yeah.
How do you process that?
For me,
On your napkin.
Yeah, on the napkin. Basically,
You must have so many napkins.
I'm with you, man, though. I'm here. My
I can
car's full of
barely use
napkins.
Excel. I can barely use Excel.
Mine's notes in my phone. So I have all these random notes that I mislabel. I can never find it. But that's where I do it.
Now too, and I don't mean to veer us off this, but now you can like put these things into AI and ask questions, and it's like much better for me because I can't ask Excel questions. So the AI is great. But yeah, so basically the goal is we need the depreciation. So every year we're going to try to hold some multifamily. This is really the first year we're doing it. So we're going to buy this 2 flat Thursday. That's our hold for the year. So we'll try to keep 1 or more deals a year while keeping the machine alive, basically, to fund the marketing, pay the acquisitions guy, and just stay afloat. Ideally, every deal now has $50,000 of profit, probably before we pay the acquisitions guy. The simple calculation that I've been told to use is, and it varies, but I kind of go with this. It's 75% of the after repair value minus your estimated rehab. And if you can get it lower than that, great. But when you're sending mail, you're not like the lone piece of paper that shows up at the foreclosure house. Like I've bought in houses and then checked the mail and it's just like full of check letters and love letters. I mean, you are just lucky that sort of time-wise, this seller has decided your piece of mail has been selected because they're ready to move. They're ready to avoid foreclosure now. Like there's a lot, in my opinion, and maybe the guys who are spending big money will say that there's more math involved and they have systems in place to calculate when the best time to send it is. But it seems there's a lot of luck to me.
No, I'd agree with that. Consistency creates luck. The more at bats you get, the more times you go after it, like you create the better chance of that opportunity. So consistency, I think, is like the key here.
Yeah, and sometimes the sellers are just burnt out and you just get a great opportunity. The timing, and we're consistent. We committed to doing these mailings every month. It's painful because there's cash conversion cycle issues at the start. But sometimes you just get deals like you walk these houses and they just want to sign on the spot and you're like, is this real? I've looked at some of these contracts and been like, let's wait till attorney review lapses to do anything because I almost don't believe that these people are just going to give me this.
Yeah, I've had it where someone in their family went to jail and they needed like the 20 grand bail money. And they like, can we close tomorrow? I'm like, close, maybe 7 days.
7 days. And you better have I always wondered like if you can actually, I don't mean to toot my own horn, but I get to do my own stuff. But like if you don't have a relationship with an attorney, like, and you just show up to some real estate attorney like, hey, I got 7 day close. I don't know if you're going to get that unless you have a referral or a relationship.
Yeah, we were talking about that before.
There's so many times where like I'm the buyer and I'll be like, hey, I'll close in 2 weeks cash. And they're like, okay. And then like their side won't have the zoning cert ready, the water cert. Like it ends up being a 25-day close, even though like I got all my ducks in a row for 10 days and I was sitting there ready waiting for them. And they were pushing me at the beginning. It's like, guys, like, what are we doing here?
Yeah. And the zoning certificates, I'm waiting for one for Thursday. And we're like, maybe it was 2 week close. The title company said they'd accept a hold harmless letter, so that they're not going to be responsible, basically. So we'll see if we get it on time. I was told by, I don't know who you guys order them through, your lawyers probably do it, but Chicago Land Agency Services is a great resource. Class, they do a lot. They do the bulk of the zoning and water certs. And I think they send an email now that says it takes 3 to 4 weeks.
Yeah, if you're listing a property, you should be ordering that like when you list, not when you go under contract, in my opinion. Right?
Don't wait.
Yeah, if you're waiting, like that's on you. Plus, that surprise might happen. Like zoning cert that was a 3 last time they bought it, like it might come back as a 2. Like that crap happens all the time.
Yeah,
you gotta give yourself time to go fight it.
My 4 flat, I just took it because it says it looked like a 3 that was faded into a 2. And I'm like, yeah, whatever. We'll be fine.
Yeah, you got to roll the risk sometimes.
Yeah, I got I have a stamped architectural plan from like 70 years ago, and it's the building. I mean, I feel like if I had a problem, I'm definitely going to lose one of the 4 units, but I won't lose 2.
I'll deal with it. All right, so I asked you this question, then I derailed you by asking about wholesaling. But what's like the next 5 years? Like 5 years from now, what's the ideal for you?
Yeah, we're just going to try to stay afloat with buying off market and just slowly buying one to, I'm going to buy 1 multifamily this year to keep, hopefully 2 next year, 3 the year after, 4 the year after, 5 the year. We'll see what happens. There's a lot of risk in this. Like you said, these numbers can be very tight. I call appraisers that I'm friends with. I have people look over my shoulder. I mean, I have MLS access and I'm still not that confident in this stuff. I mean, I've lost money before. This is not, easy, simple. Oh, you send money, mail, you line up deals. Like there's significant risk in here. I mean, it stresses me out.
Yeah,
it's simple.
Well, that's the
not
right.
easy.
That's the right answer, as opposed to the here's me in front of my flashy car on Facebook saying like, "Oh, look what I can do.
Yeah.
Let me teach you this class for $10,000."
Yeah, I'd rather a bunch of rental properties than a flashy car. The flashy car will come later.
You mentioned the mentorship. Is this the one Kirby's in this one, right? Or no?
Collective Genius, Kendall Partners.
Kendall
Yeah.
Partners in this one.
Jeff
yeah,
is.
Yeah.
Jeff's in it. So for our listeners who maybe be thinking about something like this, the value it's brought to you, has it been worth it? Because these things are not cheap.
Yeah, I think it's $25,000 a year. I mean, it was a big decision when we did it. The other thing that's weird is like they screen people and they're like, you don't do 100 deals a year. And I'm like, yeah, I know, but look at my track record. I've done some larger transactions in multifamily. They let us in. It was absolutely worth it. I mean, I learned so much about marketing from them, lead management, follow up with leads, that my law firm basically doubled in size. I mean, the similarities between getting a Social Security disability cases, which is kind of our primary law focus, and buying a house off market are identical. I mean, the people are literally, my disability clients are selling their houses to cash buyers when they get in trouble. So we're talking to the same people. So I have a lot of reps talking to stressed people about their health that are disabled that end up selling to cash buyers in some cases. It's been instrumental. So the law firm's doubled and now we're doing this. And yeah, I love being around these people. I mean, you've probably heard that saying, like, if you count the 5 people you're closest with or whatever, you're the average of them all. Well, the people in this room are very, very serious real estate investors with very large portfolios and big operations. I mean, you guys have had Jeff on here. So it's good to be in that room. It's kind of funny how it worked out that it took so long to circle back to real estate once I got in that room.
That's awesome. All right. You've seen a lot of crazy things, I'm assuming, being in these situations. Give us either a funny story or a crazy story or just a insanely poor house.
Oh, I'll tell you bad houses. I mean, so my law firm's internet marketing people, I met at a Schaumburg Business Association event. They own another website called like Restoration Master Finder, where they help you. They're like a search engine for disaster restoration. So I was having dinner with Patrick once and he's like, we have these leads for cleanouts, that nobody wants, like junk removal. I was like, this seems like I can try to pick up the phone and convert these people to sell me their houses. So like the third lead came in and I was like, oh, we don't actually do junk removal. We'll buy your house. So the guy's like, sure, come by. And I thought like, I bought stuff off market. This was a few years ago, so not the scale and haven't seen as much. And he stands at the door and he goes, oh, it's really bad in there. And I'm like, I've seen it all, don't worry. This place was floor to ceiling full of food waste. The guy was a food hoarder. So he would take his pizza box and just throw it over his shoulder. He would take his Chinese food.
Oh my God.
It was stacked to the ceiling. He had an alcohol problem. It looked like, there was cans of ice house to the ceiling. There was mice. I could smell it to this day. This was 2-3 years ago. And that was so I don't know.
That's a thing, food hoarder? I had never heard of
Food
that.
waste hoarder. I made up the term, but I saw it in person and smelled it. There was mice burrowing, but I'll tell you, 3-4 days later, a couple 30-yard dumpsters, the place had no smell when the carpet was gone. It was instantly fine. And the second one that was just bizarre was we bought a condo in Schaumburg, and the guy was hoarding pornography. And I'm not talking like internet stuff. This was magazines. This was posters. This was VHS tapes. The place was like a time capsule of pornography. I mean, I have the photos in my phone. It was nuts. It wasn't floor to ceiling, but you couldn't walk in this house. It was everywhere.
You had to thrust through?
You had to thrust through. Another poor guy who had to go feed the dumpster. I mean, it was, yeah. And I mean, we've had tenants die. I've had some pretty, I think at scale, you have some weird things happen.
How about the crew that's got to trash that out?
They were grossed out and laughing.
Yeah.
That's weird.
The GC that ran that one was like, this is the weirdest thing I've ever seen in my life.
Yeah.
God.
Man.
Those are two great stories. Like,
I'm glad you guys can enjoy them.
a lot of people come up with a lot of the same stuff. Like that was very unique, like for this show. Like, wow.
Yeah, we love hoarder houses. Those are my favorite. If to the listeners, if you can ever buy hoarder houses, what's below the hoarding is really usually not that bad.
Yeah, we had one
That
recently.
clean out's not, the most I think I've ever paid for a clean out is like 10 grand.
I had a
Right?
guy-
Like, they're usually a couple $1,000 and all of
Yeah.
a sudden it's like, all right, now let's go to work.
I had a
It's
guy a couple
it's a
weeks
very simple problem to fix.
30 grand. And this guy did books. So he had to go and sister in all the joists because everything broke.
Oh, it's
Yes.
smiley
It was a
face.
newer house too. It wasn't even like an old house. It was like a 1990 house. So like, that's how like heavy it was.
Yeah, I've walked away from some that had like, I don't know what they call it, hazmat.
Man, the food, like I can't imagine. I would struggle to see the value.
It was a great house. It was a great house in McHenry. It like backed up to these like 3 fishing lakes in the downtown McHenry area. I don't remember what we paid, and we did really well. I know we made like $70,000 on the flip, and that's what kind of like led me to flip houses. Was like, oh, I can do this. Like, we just need to find more of them. It's all about leads in both the law and the real estate. I mean, if you could just get leads and figure out how to monetize them, that's the business.
Yeah, I was just thinking, how can you create a list of hoarders? What
You
type
team
of
up with junk removal companies. You call up,
junk removal? Yeah,
you call those guys up and say like, hey, like who's calling you? What's going on?
Converting them is hard. Like getting the junk removal people that answer the phones to push you the leads. I mean, maybe they could just sell you them so you can call them again, but you want to buy them with the junk. You want to solve that problem and get them out.
how do you get it beforehand? Someone that puts next to nothing garbage out.
You can't go to social workers and doctors that are treating hoarders because they have HIPAA, I don't know.
Oh, I like that you've thought about this.
Yeah, I thought about that too. Yeah.
I've thought about lots of different companies that are very specific to niches in real estate, like just like you could name your company like the probate purchase company, and all you do is send probate mailers and harass lawyers with mailers. And you might, a lead might hit a house and a lead might hit the lawyer, and they go, oh, this is the legit company. You could do, I wouldn't call it hoarders, but there's got to be a way to just focus. I'm sure there's somebody out there that's dialed in how to get hoarder leads.
Yeah, we'll have them on the show.
Yeah.
I'll find them for you guys.
All right. What's your competitive advantage? How have you been able to find so many hoarders? No, how have you been able to do everything you've done while others wish they could?
Being a lawyer really helps. I think if you look around the landscape of like really successful investors, I noticed there's a lot of like lawyers that hate being lawyers and engineers that make great investors. So that, and just getting in the rooms with different people. I mean, I think that one of the things that I've learned being a lawyer, or just kind of constantly learning, is like, you need to, like, if you go into a room and learn about real estate, like you could figure out a way to bring those skills and knowledge back to your law firm. So just finding a way to learn from different businesses and different ideas to be used towards your thing is really important.
What is one piece of advice you would tell someone that is yet to buy their first property here in the Chicagoland area?
Go to a meetup group, go to a few, and get serious about doing it, and just latch on to somebody that's willing to help you, because you're not going to take up that much of their time if you're like, what do I do with the 4 flat? How do I buy this? Like, it's not that complicated, and there's a lot of people that are just willing to help at these meetups. If you're kind of on your own, there's just so much help out there. It's free.
If you're going to do that, I agree 100%. It should be like something specific like that, right? Hey, I have this for you and I have this deal. Not like, oh, how do I get started? Oh, can you mentor me? Like the general question is, no one has time to figure out your situation. Come with
Yeah.
something specific and someone will help you.
Yeah, and if you're going to obviously take up their time, like be grateful, offer help, whatever, but you're not going to need that much time unless you're kind of one of these people that's, analysis paralysis. Like, I am not someone that I mean, people who know me that are going to listen to this and go, yeah, he's the napkin guy. Like that's accurate. Like, you just figure it out. You make sure it's a good deal and go as fast as you can.
What do you do for fun?
Try to stay in shape. You know, I just did like a half century ride, the 50-mile bike ride. Work out pretty much a couple days a week, every morning almost. Winters I snowboard. I mean, I'm someone that's really eats and breathes this real estate stuff. When I'm not at work as a lawyer, I'm trying to figure this stuff out. I mean, I probably spend more time on this than I should.
Oh, that's good. All right, so give us a good book, podcast, or self-development activity you'd recommend to our listeners.
Aside from this podcast,
We'll take it.
I'll give you a podcast and a book. So, you know, I owe a lot of the growth at my law firm and the real estate side to that Collective Genius Mastermind. I mean, they've been just instrumental. They have a podcast that's pretty good. I mean, I stopped listening to most real estate podcasts besides yours and theirs. I kind of thought Bigger Pockets fell apart and never really got into anybody else. Book-wise, you know, I spend a lot of time speaking and talking to people. I really like this book that I picked up in law school. It's called The Charisma Myth by Olivia Fox Cabane. And it's just a really interesting book about, you know, how to talk to people, how to, you know, have charisma, basically. And I think it's useful in any real estate or business industry.
Anyone with kids, it's now called Riz. Like it's not charisma anymore. It's Riz.
Riz.
Yeah,
Oh,
yeah.
wow.
Lance, I see you smiling. Lance got Riz. And it took me forever. I'm like, oh, like I had to look it up on like Urban Dictionary. I'm like, oh, dude, that's short for charisma, dude. Like you guys think you created something new. You just took off letters.
I never heard that.
So you got Riz, man. All right. Other than yourself, name of valuable Chicago real estate investors.
So have you guys had on Dorian from Alpha Adjusting ever?
That was the one
I did solo.
So funny thing with him was I thought it was Zoom and it was in person when we were doing both. And so Mark's like, where are you? I was like, I'm ready. I'm sitting in front of my computer. He's like, it's in person, dude. And I was like, well, I'm 40 minutes away. You got
And he
to.
came all the way from, I think he's living in Lincoln Park. And I'm
Yeah,
like,
so
all right,
you're
man,
right.
it's just you and me, dude.
And I see him at every meetup event, and every time he reminds me that I wasn't there.
I had a flood last winter at my Airbnb, and you know, there's so many like, don't use an adjuster; they're going to rip you off. Find the right adjuster. That guy's the right guy. He gives back so much to everybody in real estate. If you ever go to meetups or NBOA events, he's like the funnest guy to be around. Yeah. So him and Tracy really helped me with the flood. I mean, it's kind of a detour, but I did get sued as a result of one of the general contractors there. But still, I give him a lot of credit. You know, just one tip that he taught me: if you ever have a flood, I don't know if you guys know this, you can't just like repair the pipe and hope the insurance company comes and pays you. You need to save the piece of like the water line that broke. Yeah. And if you don't save the piece of the water line that broke, you are not going to recover any money in this flood. I wouldn't have known that. I'm not sure I would have cut the pipe out, but still, there's so many things when it comes to like insurance losses that are so high risk that I don't know if he charges 5 or 15% or 20, but it's worth every penny.
Yeah, I agree 100%. I remember we had that boiler incident that blew up. Like, we had to keep the old boiler there for like months. They had like different people come in and look at it and like just sitting there like, can we get rid of this? There's a lot of metal here.
Yeah, they're worth it. They're really worth it. Alpha Adjusting.
All right, so we'll link to them in the show notes. I don't remember his show because I wasn't even there, but we'll link to it.
Good excuse. Okay.
Shawn, thank you so much. You provide a ton of value to our listeners. How can they find more about you? Is there any way they can provide value to you?
You can come to my meetup. We have a meetup in downtown Palatine the first Wednesday of every month at Lamplighters. Our website is thegoodlawgroup.com. You can reach out to me on my cell phone.
And you are actively representing buyers and sellers in real estate transactions.
Yeah, we are. It's not, you know, I'll tell you, like,
Call me with an off-market deal before you call me to represent you.
Yeah, I'll tell you though, like if you're a first-time wholesaler and you want me to help you wholesale your piece of junk on the south side for $500, please go somewhere else.
Politely. So, all right, Chicago Fact. Who are we playing for? Who's the sponsor?
All right, today's sponsor is Essex Capital Market. All right, we're playing for David Jones. So David Jones bought a sweatshirt or hoodie on Straight Up Chicago Investor merch store. So David, if myself or Shawn gets this question right, you get a $50 gift card brought to you by today's sponsor, Essex Capital Markets.
Weather's changing. I need a few more hoodies. So we've mentioned Palatine multiple times. It's where your meetup is, where I had the pleasure of speaking, I believe, a month or two ago. If you take away the schools and the hospitals in Palatine, the largest employer is, and your options are Weber Grill, ABT, Tony's Fresh Market, Zebra Technologies. Who employs the most people in Palatine after you take away the schools and the hospitals?
Zebra's in Vernon Hills.
I'm in on Weber. I think there's like a big plant off Euclid, and then there's one by my office on like Old Hicks.
Yeah, because I remember that was a big deal when they built that building in Huntley. What was the other two options?
ABT,
they're in
Tony's Fresh
Glenview.
Market.
That's Glenview. Tony's, I think they just changed hands too. So I'm going Weber. They have like weird.
You go Weber, I'll go Tony's,
They
just
have
in
weird
case.
industrial space all over Palatine.
It's Weber, baby.
Is it?
Good job.
Yeah. All right.
I drive around Palatine. They have weird. They're just everywhere.
Zebra's in Vernon Hills, ABT's in Glenview. Like,
Correct. Did you guys like that just anything north of me, I just put mashed together? It's all the same.
even though to us it's like so far apart.
It's up 94 and not even 90.
At least for us, it was just like Lake Cook or Palatine Road.
This
Anyway.
one was built for me. I used to live in Palatine. My office is there. So
Yeah. Well,
There we go.
We try it together. All right. Well, David, you get a $50 gift card brought to you by Essex Capital Markets. So, John, thanks for coming on. Tom, thank you. Listeners, we are opening up for 2026 sponsorships. And if you or someone you know is interested in being a sponsor, send us an email at straightupchicagoinvestor@gmail.com. John, thank you. Tom, thank you. Listeners, we'll see you next week.
Thank you.
thanks.